So Mid-Europa Partners is probably the largest and one of the most established platforms, private equity platforms in Central and Eastern Europe. We have been exclusively dedicated to the CE region since our inception in 1999, and over that period we have invested close to 4 billion euros across 4 funds in 36 companies and in 18 countries. As Mid-Europa, we operate from 4 offices. One is in London and 3 in the region, and all of our 23 investment professionals have roots in the CE region and speak at least 1 or more local languages. In terms of the investment, Mid-Europa is primarily targeting mid-market transactions, so it means companies with enterprise value somewhere between 100 and 500 million euros, but we can also do slightly smaller as well as larger transactions. We do mostly control investments, but we have been also successfully teaming up with founders and strategic partners in the past. In terms of sectors, we have a thematic investment approach, which we try to then replicate at a later stage in another investment in other countries, so from investment to investment, from country to country. The key 3 themes for us are growth driven by domestic consumption, 2, it's buy and build, and 3, it's the regional expansion. And this means that we are mostly investing and looking to invest in companies in healthcare services, consumer, retail, consumer healthcare, media, pay TV, leisure, transportation, and business services. At Mid-Europa, we adopt a proactive, value-driven strategy. We are looking for operating improvements, and also we invest in focused and well-timed capex. Generally, we like to look for companies that are leading in their market, that have strong management team and strong competitive advantage. And we like to invest in companies that have potential to become strategic assets at the time of our exit, and close to 60% of our exits so far have been to strategic players. At Mid-Europa, we believe that the CEE region remains attractive for private equity investments. There still remains a meaningful gap in GDP per capita compared to Western Europe, which drives convergence and in turn economic growth. The GDP growth rates continue to outpace Western Europe. What we find particularly positive about this region is that this economic strength is underpinned by growing domestic consumption, which is fueled by rising disposable incomes, but also very low levels of consumer debt compared to Western market. And this economic growth and economic strength is at the same time coupled with quite low volatility compared to emerging markets. And we are also seeing an increasing number of sizable companies, so we believe there will be more and more opportunities for us to do in the future, and so we are generally quite positive about this market. 2017 has been an extremely active year for us. We managed to exit several investments, and also we closed 2 acquisitions at the beginning of 2017 and signed an agreement to acquire Hortex, the leading beverage and frozen food player in Poland. We continue to work on several deals in our pipeline, and we believe that we will close a few more transactions next year. The general market remains quite positive, although there are some worries that perhaps the markets are growing too fast, and especially we can see it in the wages and in personal costs that are increasing. This means that while business here are growing at revenue, there is some pressure on the margins, but it's just a question of properly compensating for it in the companies. And what is also positive about increasing wages is that most of the population in the CEE immediately consumes this money, puts it into buying food, for example, food retailers, and that's why the consumer retail healthcare markets will continue to grow as a result of it. In terms of geographies, we are seeing quite a few opportunities in southern Eastern Europe, like Romania or some Balkan countries, as well as in Poland. As I mentioned, we closed and signed altogether 2 transactions in Poland. Our central core has been slightly quieter over the past years. For example, in the Czech Republic used to be historically extremely active market for us, and our very first investment was in the Czech Republic, and we invested close to 1 billion euros over the past 10 years here, but we're seeing slightly less opportunities, actionable opportunities in our size bracket right now. But we believe this is going to change, and there will be more companies for us to buy in the near future as the companies grow into our size, and also the companies and the founders will need to look for succession solutions.